Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio in Times Square, New York City, we have Dan Brady. He's a principal wealth manager at Savvy Advisors. We're going to discuss the macro environment, 60-40 portfolio construction, as well as the next generation of advisors. Dan, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me, Jill.
All right, and let's talk about the macro for a moment here. As we approach year end, what's your take on the macro environment, and what's your message to clients when you talk about the current market and economic conditions?
Well, as we get near the end of 2023, it's been an interesting market. Obviously, there's been a lot of talk about the Magnificent Seven: Apple, Amazon, Alphabet, Meta, Microsoft, Tesla, and Nvidia, right? That's got a lot of talk, and they've done very well. But there's also this camp that I call them T-bills and chill, is what I was trying to say, right? People are really happy getting 5.5% there and having no risk. So as we enter the end of the year, what does 2024 look like? Well, one, I think that obviously inflation has come down quite a bit, at least year over year. 7.7% last October, 3.2% this year. So it seems like the Fed has accomplished some things. And what does that mean going forward? It probably means that a more diverse portfolio, other parts of the stock market will continue do well in 2024. I'm sorry.
No, it's fine. But that's a great segue, though, because you were talking about T-bill and chill, right?
Yep.
So there's that narrative in the market, 60-40 is dead. There's other ways you can structure your portfolio. Yep. Do you think it still stands up when you think of 60-40?
I actually think a 60-40 portfolio makes more sense than it did for the last 10 years. Why? Because you're actually getting a rate of return. You also have a complete repricing of bonds in 2022, which was painful, but now there's actual real value in bonds. So as opposed to 4 years ago, 60-40 didn't really look like it made a lot of sense to me with interest rates at zero, a lot of risk in bonds. Now that they're repriced, they're probably they're fairly valued, and you're getting a good interest rate. So it's working both ways for the investor.
And speaking of interest rates, it doesn't seem as if investors really paid attention to the Fed as much as they have, certainly since we've gone through the pandemic. So do you think the Fed is done raising rates? And how do you think this is going to impact investors and their financial plans?
I do think they're done for now. They haven't raised since the summer. As a matter of fact, I think a slight cut in March of 2024 might be on the table. Why? If we are seeing signs of the economy weakening, and it does seem like the pillar of the American economy being the consumer, during COVID and after, because of stimulus, they were buying the goods, right? They were buying barbecues and rugs and beach chairs and whatever else for the house and exercise equipment. So I think the bears thought that the consumer would tap out earlier in 2023. What we've seen in 2023 is that consumer has surged into the services part of the economy. But now the signs are with credit card debt, people diving into retirement to keep up with spending. It does seem like the American consumer is a little tapped out at the moment.
Yeah, and it's so interesting. It's been so hard to bet against the American consumer. So interesting to see how that's going to play out in 2024. Let's talk about the next gen of financial planning, which is a subject I really do enjoy talking about. We know there's going to be a big generational wealth transfer for the baby boomers. What do you see at Savvy in terms of key themes when you think about next gen?
Well, I think what everybody wants, I will say this, I think it's the advisor who is more reluctant to change than the actual client. I think the client is savvy, no pun intended, enough to look, they are doing everything. They want seamless digitalization. They want paperless transactions. They want to go online and see things seamlessly. They don't want that old steel file cabinet. It's not the way the world's anymore. I have a lot of faith in both young clients and older clients because I'm working with them who are fully embracing this, and we want to make that easier and easier for them.
So how do you think technology is changing the way advisors interact and engage with their clients? I'm sure, again, talking about the pandemic, you had to, make a 180 move and figure out ways to keep in touch with your clients. How has technology impacted your business?
Well, it's given the client the flexibility, whereas, when I started on Wall Street 25 years ago, everything was done, over a meal or an in-office, meeting, which was great, and I still enjoy that. I think that connection is still important. However, to give a client a flexibility to do a Zoom, to send all the necessary documents, to prepare for that meeting, do it seamlessly, quickly, it just opens up the world to everybody. It makes everyone's life easier. There'll still be a time and a place to sit down with someone and enhance that connection, but this is the way the world's going, and I think people like it, and it certainly makes my business more productive and my clients' life more productive as well.
You know, it's interesting. It's banking, the clients are really driving the narrative and telling them versus, okay, here's a product, this is what you're going to get in your portfolio, and have a nice day. So it seems as if clients are really driving the choices and helping to evolve the industry. Again, whether it's financial planning, banking, fintech.
I think the client is willing to morph, and I think it's the advisors who are more reluctant to the technology, and I think it has to be embraced. You know, as Wayne Gretzky says, total cliche, you know, you go to where the puck is going, not where it's at. And obviously, I think Savvy's well positioned, as well as the new age 21st wealth management fintech companies.
Where can the audience learn more about Savvy in your practice?
Well, of course, you can find savvywealth.com, a lot of information about both myself and the firm there, and on X, not Twitter, and on LinkedIn.
All right, we appreciate the insight, Dan. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.